Today, we will talk about general provisions and how they work. General provisions are funds set aside by a company to pay for anticipated future losses. They are considered to be a higher risk asset because it is assumed that the underlying funds will be in default in the future. In the business world, future losses are inevitable, whether it be for the falling resale value of an asset, malfunctioning products, lawsuits, or a customer that can no longer pay what it owes. To account for these risks, companies must ensure they have enough money set aside. However, companies cannot simply recognize a provision whenever they want. Instead, they must follow certain criteria laid out by regulators, and both GAAP and IFRS lay out guidelines for contingencies and provisions. Provisions are created by recording an expense in the income statement and then establishing a corresponding liability in the balance sheet. General provisions for bad debts or doubtful accounts are often shown on the balance sheet. The reporting entity is required to carry out an impairment review to determine the recoverability of the receivables and any associated provisions. Because of international standards, banks and other lending institutions are required to carry enough capital to offset risks and must indicate an allowance for bad debts or a general provision on the balance sheet. The reserve funds provide backup capital for risky loans that may default. Specific provisions are created when specific future losses are identified, while general provisions are created to cover anticipated future losses. Specific provisions are allocated at the time a loan is approved, while specific provisions are created to cover loan defaults. Here are 3 key takeaways. 1. General provisions are funds set aside by a company to pay for anticipated future losses. 2. Lenders are required to set up general provisions every time they make a loan in case borrowers default. 3. The act of creating general provisions has been declining since regulators prohibited basing provision level estimates on past experiences. Hope this would help. Thanks for watching.